On Thursday, February 6th Eastern Time, all three major U.S. stock indexes closed lower. The Nasdaq Composite declined for the third consecutive session, with a sharp drop in tech stocks, especially chip and AI leaders acting as the core drag. Precious metal stocks fell alongside gold prices, and energy stocks also weakened. Driven by cooling U.S. non-farm payroll data in January, recurring global economic uncertainty, and rising safe haven capital flows, market trading sentiment remained cautious overall. As of the close on February 6th Eastern Time, core closing data cross-checked with Sina Finance and Jinshi data shows the Dow Jones Industrial Average dropped 592.58 points, or 1.20%, to 48,908.72. The Nasdaq Composite fell 363.99 points, or 1.59%, to 22,540.59. The S&P 500 declined 84.32 points, or 1.23%, to 6,798.40. On the day, capital flowed out of high-valuation, growth-oriented tech sectors and into defensive sectors modestly, with prominent structural divergence across sectors. Sector performance showed significant divergence. Tech stocks fell broadly, leading market downside. Supermicrocomputer and Qualcomm both dropped over 8%. Microsoft declined nearly 5%. Amazon fell over 4%. AMD dropped over 3%. Tesla lost over 2%, and Nvidia slid over 1%, weighing heavily on the Nasdaq. Apple edged higher against the trend, and Intel rose slightly, with notable divergence within the tech sector. Energy stocks weakened collectively, dragged down by falling international crude oil prices, with both ExxonMobil and Chevron closing lower. Precious metal stocks also weakened, with Barrick Gold falling over 2%, and silver plummeting over 16%. Massive safe haven capital outflows pushed the precious metal sector lower across the board. Chinese concept stocks generally weakened, with the Nasdaq Golden Dragon China Index extending its decline, and individual stocks showing mixed trends. From the macro and commodity market perspective, U.S. non-farm payroll data for January indicated a significant cooling in the labor market, further amplifying market concerns about the pace of U.S. economic recovery. Federal Reserve officials have maintained divergent remarks, with hawkish officials emphasizing prudence in interest rate policy and dovish officials signaling rate cut expectations, leading to wavering policy expectations. Geopolitically, U.S.-Iran nuclear negotiations were held in Oman on February 6th local time, and Israel issued a tough stance, with geopolitical uncertainty continuing to disrupt the market. In the commodity market, COMEX gold futures closed at $4,796.07 per ounce, down 3.77%, and WTI crude closed at $63.29 per barrel, down 2.84%. Both oil and gold prices weakened, dragging down their respective sectors simultaneously. Looking ahead to the market outlook, on Friday, February 7th Eastern Time, markets will focus on remarks from Federal Reserve officials, U.S. initial jobless claims data, and subsequent progress in U.S.-Iran negotiations, and the indexes are likely to continue a volatile and divergent trend. Strategically, it is recommended to avoid volatility risks in high-valuation tech stocks, especially the chip and AI sectors. Focus on structural opportunities in defensive sectors, strictly control positions, dynamically adjust the portfolio structure in line with policy signals and data changes, and carefully respond to market disruptions caused by geopolitical situations.